Hey traders, this is Ron Haydat, Market Tamer. Happy Sunday. Hope you're having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. As we kick off here, I'm recording this around 6:40 p.m. Eastern on the 21st, which is a Sunday of October, and we can see that we're down about 12 points in the ES. The market just opened 9-10 minutes ago. A lot can change. We could be plus, we could be further minus, so who knows? I don't pay attention to the overnight futures when we're looking to actually do swing trading as an example, when we want whole days that are involved. So aftermarket, really don't care right now. If we look at the Dow here, which is the diamonds, I can still draw this little pennant. And it's not going to be perfect, but you know what I mean? Just for an approximate, you can see we're just getting this little tight range here. Here's the all-time high. We've come down. We T-boned off the 200-day moving average in purple. We've bounced. Now we're coming back down here. I still want to watch the 200-day as support. And if we get below there, then we come back down towards 240 on the diamonds. If we break out to the upside, the Dow is still the cleanest. If we pop out of this, and then we get above the 50-day in orange, the 20-day in red, which is around 260, then the target back up at the old all-time highs. Take a look at the SPY, which I have a bullish position in. If I zoom in here, we broke out of this little tight pennant, but you know what now, and that's the beauty of technical analysis, sometimes you can just keep on redrawing it, right? And we have another little pennant that's still going on here. This also still is a bear flag too. Let's watch the 200-day. Anytime you close below that on a major index, that is noteworthy, but we also want to watch the low, the closing low from 1011, which is 272.17. We could put alerts there if we wanted. If we get below that, that's how we drift down into this swing low, 268-ish, and then back into this big support area. If we take a look at the Qs, they're still in that pennant as well. We need to break out not above just the 20-day EMA in red, but we need to get back above the 50-day SMA in orange to go back up to the highs. Otherwise, the easiest one here is if we break the lows from 1011, then we start coming all the way down here. That could be a long ways off. Then if we look at IWM, which are the small caps, they had a tough day on Friday. They were already back. If I zoom in here, they're at new closing lows. They're not at new lows from the downturn that began in September, but closing lows, that's been accomplished. And their support level, we sort of tagged that support in May, end of April, a little bit, but otherwise the real target's 145. And then if I look at the $ VIX, while the indexes are looking at bear flags, the VIX is going to look like a bull flag, and that's exactly what it's doing. We had the pop, we pulled back, and now we're pushing higher. So the VIX is still in a somewhat bullish stance as we walk into this week. And if we look at the SPY, it's still looking in that bearish stance. So caution is still warranted this week. There's a lot more earnings reports that are due, but there's a lot of work that the bulls need to do, breaking out of the panic, getting above moving averages. So bottom line, caution is warranted. Two stocks that are having earnings this week, Google and Amazon. Now, according to Thinkorswim here, Amazon is due to report 10:25 at 4 p.m. Eastern. Still a couple days where I could consider adding protective puts if I wanted to. I think this is a fantastic opportunity to learn about how puts can protect a portfolio. If the stock drops and if the stock pops to the upside, how they lose value. So here's Google. Again, earnings 10:25. We have lower highs here. We have lower lows. Earnings could change that. We could get a pop up, but if it misses and then it takes out 1,000, that's a big round number and a big support level, and that could lead to, potentially a significant downtrend. Here's Amazon. Broke down. This is still a bear flag, just like the overall markets. Amazon is due to report 10:25, 4 p.m. Eastern. So it looks like we're gonna have some fireworks later in the week. Near-term support right now is the 200-day, but anything that happens between now and then, unless the market just really rolls over, earnings should be the defining event that moves these stocks up or down. I did get questions on NVDA and Netflix, the two ends of the old FANG stocks. I'll start out with NVIDIA. Bad day on Friday. There's more support, ballpark, 215-ish, and then down here at 185-ish. But if I go out 2 years on a weekly chart, so now each candle is 1 week, we just cracked the 50-period moving average. This stock hasn't done that. Let me take you back five years. We have not been below the 50 period till 15, 16. That's how long it's been. So this is noteworthy. The company's going to have earnings, but not practically another month. So for support, I would say the 215-ish area, even on the weeklies, 217, still another 12 bucks lower before we find support. Then there's more support around that 185, 190 area. So yes, NVIDIA is bearish on the dailies and the weeklies now. If I take a look at Netflix, it's been going nowhere since July. Now, the company doesn't really have a rock star period of time until we get into January from a seasonality perspective. But with Friday's sell-off, even post-earnings, they didn't want to run it higher. There's a clear line in the sand. It's right around 380. You just take these previous highs. You also have the gap here. The open there was what? The high. The high was what, 385? So we could put 385 as a marker. If we get above 385, that would be bullish, and then a challenge up around 420. Right now, there's a low here in August, and there's a low in October. That ballpark's 320. We break 320, then we just go to swing low at 275, 250, and then gap fill back to almost a year ago. So Netflix also is bearish in the short term, but watch the 200-day and watch that little double bottom there and there, 320. How about let's finish out the fangs and do Apple and Facebook. Apple's going nowhere fast. You see the support zone I have drawn in here, which is, 213, 214. Short term, yes, it's bearish because we're below some moving averages, but it's really in a bit of a box. Here is Facebook. It's down in that old support zone. Watch 150. That is key support. Only $4 left here on that. And then two stocks that might have some interesting upside potential. Here is Skechers. We had an earnings jump. It was almost up to 32.50 before it pulled back, but there was an earnings here. The close was 33.25 before we had that big gap down. Above 33.25, there's a huge gap to fill up to 42.50. So what I want to do is I want to put alerts or just keep an eye on this stock. 33.25. Yes, the stock needs to still jump 10%, but something above there, there's, in my opinion, great potential upside. And we'll talk about, trailing stops, of course, to use in a paper trading account. And let's look at American Express, AXP. For a potential bull put trade idea, the 200-day support, 200-day support, 200-day support. Wasn't perfect, but for the most part, it stays above the 200-day. Well, now we had earnings. We've moved up on good volume. I could maybe consider a $100 short put, maybe with a 95 long put, going out to next month, which would be either November or December. Okay, so November or December. If I go and look at an options chain, right now November is the only month that's listed, but if I look at 100, there's only 50 cents. So with only about 26 cents net credit, November may not work. So if I'm willing to go to December, which would be installed on Monday because we just went through monthly expiration for October, we'll then get December. I can check out to see what the open interest is once the market opens up. Usually I like a minimum of 200 open contracts at these strikes before I'd consider trading them. Or I could go all the way out to January, which is basically 3 months, and then do a 95, 100, and that would yield about 64 cents. I could probably get it up to maybe 68, 69, or even 70 cents with a limit order. Again, always in a paper trading account. And last but not least, let's just take a look at gold. It has popped above the 50-day in orange back on the 11th. I highlighted it with some recent videos. Right now, we're just bull flagging. The target would be the 200-day. But remember, gold does not shine until the last week of December, first week of January. So yes, it's popping, but it's still going nowhere fast. And then silver, it really can't get out of its own way. It's been back testing the 50-day in orange. But look at all these dark candles. Black candles meaning finished at the lows of the day, but still higher than the previous day. But what that means is there was selling pressure. It couldn't hold the highs. Then the red candles opened higher, closed lower. There's just no upside momentum right now. So silver's lagging, which is going to make it hard for gold to really push higher. And here are the miners, a little bit of a bull flag. GDX target 200-day moving average in purple. All right, tried to get that done as quick as possible. It already went to 9 minutes. I wish you guys a fantastic week ahead. I'll be back with you in tomorrow's video, folks. Take good care.